Hey there. Welcome back to the deep dive. We've got something really specific and pretty interesting to dig into today. We're pulling our insights straight from one particular source.
That's right. It's a news article, and it's reporting on a recent filing with the SEC, the U.S. Securities and Exchange Commission.
Right. And the focus, it's a filing made by Trump Media and Technology Group, TMTG.
Concerning a potential Bitcoin ETF.
Exactly. TMTG, that's the company behind Truth Social. And as the article points out, it's majority owned by Donald Trump. They've put in an S-1 registration form.
Mm-hmm.
So our mission today really is just to unpack the key details, the essential stuff, and maybe some notable aspects of this specific filing.
And importantly, only based on what this source article tells us about that filing.
Absolutely.
And maybe just quickly, for anyone less familiar, an S1, that's basically the first big document a company files when it wants to offer new securities, like an ETF in this case.
An exchange-traded fund.
Yeah. And a Bitcoin ETF, the idea is pretty simple. Let people invest in something that tracks Bitcoin's price, but without needing to actually, buy and store the Bitcoin themselves. It just aims to mirror the price performance.
Okay, straightforward enough. So let's jump into what this filing actually says, according to the report. TMTG filed this S-1 form with the SEC.
And the date the article flagged was June 5th, just recently.
Got it. And the proposed name for this thing?
It's called the Truth Social Bitcoin ETF.
Okay. The name is, well, it's direct.
It is. And the goal, based on the filing language reported in the source, seems pretty clear, too. It says, the trust seeks to reflect generally the performance of the price of Bitcoin.
Right, standard objective for a Bitcoin ETF, basically.
Pretty much.
Now, launching an ETF isn't just about the company proposing it, right? There are other players.
Definitely. The source notes that the stock exchange they want to list it on, NYC Arca, has already sent its own proposal to the SEC, to get approval for listing this specific ETF.
Oh, okay. So that's a separate but necessary step.
Correct. And TMTG isn't doing this in a vacuum. The filing apparently identifies a partner.
Who's that?
Yorkville America Digital. The filing reportedly describes them as a crypto asset manager and a partner of TMTG.
Interesting. Okay, so let's get into the structure a bit. The nuts and bolts, based on what the source says is in the filing, what assets would the fund actually hold?
Primarily Bitcoin. That's the core asset. And this Bitcoin would be held by a custodian, on behalf of the trust.
A custodian. So for listeners, that's like a super secure digital bank vault, right?
Yeah.
Guarding the actual Bitcoin.
That's a good way to think about it. Absolutely critical for security. And the filing, according to the source, names a specific key service provider for some really crucial roles.
Oh, yeah.
The cryptocurrency exchange, Crypto.com.
Crypto.com.
Okay.
What are their proposed jobs here?
Well, according to the filing, several big ones. They'd be the exclusive custodian, so the only ones holding the Bitcoin.
Exclusive custodian. Got it.
Also, the prime execution agent. That means they'd be the main ones doing the buying and selling of Bitcoin for the fund.
Okay.
And the liquidity provider, too, helping make sure the ETF shares trade smoothly.
Wow. So exclusive custodian, prime execution agent, and liquidity provider. That's quite a central role.
It is. The article highlights that exclusivity. The source says the filing language states Crypto.com will offer certain services exclusively to the trust. So, yeah. Very consolidated.
And what about the cost for investors? Does the filing mention fees?
It indicates that the specific fees are still to be determined, TBD.
Right. Which isn't totally out of the ordinary for an early S1, I suppose.
No, not entirely, but it's definitely something potential investors will watch closely. Fees really impact your returns on an ETF, so it's a big question mark for now.
Okay, now here's a part where the source article really seemed to zero in on some specific wording in the filing. It mentions a clause about potential conflicts of interest that sounds, well, quite blunt. The report says the filing seemingly reserves the right for the ETF sponsor to front-run transactions.
Front-run. Yeah, that's definitely a term that raises eyebrows in finance. It generally means trading based on knowing about a big transaction that's coming up, one that's likely to move the price.
So in this context, for this ETF, based on the reported language, what does that mean?
Well, the source directly quotes the filing here. It says, prospective shareholders should be aware that such persons may take positions in Bitcoin which are opposite or ahead of the positions taken for the trust.
Ahead of. Wow. That seems explicit.
It does, and the filing itself, according to the source, doesn't really mince words about the possible outcome. It apparently adds, there can be no assurance that any of the foregoing will not have an adverse effect on the performance of the trust.
So it's basically saying, hey, this might happen, and it could hurt the fund's performance. Laid out right there.
That's what the reported language suggests, yes. And what the source finds notable and points out is that while lots of Bitcoin ETF filings do talk about potential conflicts.
Right, that's standard risk disclosure.
Exactly. But they typically include measures to mitigate such conflicts, things the fund will do to prevent or manage them. The excerpt provided in this source article, reporting on this filing, doesn't seem to mention those mitigation steps connected to this specific clause.
It just states the potential conflict and the possible negative outcome. Interesting.
It's definitely a point the source highlighted.
Okay, another specific technical thing the article discussed from the filing, how it handles potential hard forks.
Yes, forks. For listeners, that's when a blockchain undergoes a major change, sometimes splitting off and creating a whole new cryptocurrency alongside the original, like Bitcoin Cash from Bitcoin years ago.
Right. So if Bitcoin were to fork again and a new coin was created, what happens to the value or the rights to that new coin within this ETF structure?
According to the filing language reported in the source, the ETF holders get nothing. They have no right to whatever new asset might be created.
No right at all.
That's what the reported text indicates. The filing apparently states quite clearly that the sponsor will cause the trust to permanently and irrevocably abandon the incidental rights.
The incidental rights. So that's the term for these potential spin-off assets.
Exactly. Or things like airdrops, other potential benefits from holding the underlying crypto. The filing says the fund will just essentially forfeit any claim to them.
Okay, so that simplifies things for the fund manager, I guess, but means ETF investors miss out on potential upside that direct Bitcoin holders might get in a fork situation.
Precisely. It's a structural choice with clear trade-offs.
Man, these filings really get into the weeds. Okay, let's do a quick recap of the key points we've pulled, again, directly from this source article about the TMTG filing.
Okay.
We've got Trump Media, TMTG filing an S1 with the SEC dated June 5th.
For the Truth Social Bitcoin ETF. Goal, track Bitcoin's price.
NYC Arca is also moving forward with its own listing proposal for it.
And Yorkville America Digital is named as a partner, a crypto asset manager.
Structure-wise, holds Bitcoin. Crypto.com is tapped for those key exclusive roles: custodian, prime execution agent, liquidity provider.
Right, and fees are still TBD, to be determined.
And then those two clauses that the source really flagged.
Yeah.
That language about the sponsor potentially taking positions ahead of the trust.
With the filing reportedly acknowledging this could have an adverse effect on performance.
And the explicit statement that the trust, and therefore its shareholders, will permanently and irrevocably abandon any incidental rights from hard forks or similar events.
All drawn directly from the S1 filing, as reported by our source, gives you a real window into the proposed mechanics and the potential risks as they're laid out in the official document.
It certainly does. So wrapping this up, here's something to think about, just based purely on the specific details from the filing we've discussed today, as reported by our source. When you see language explicitly allowing the sponsor to potentially trade ahead of the fund, alongside language that formally abandons shareholder rights to assets from forks, what might those specific structural choices, stated right there in the filing, suggest about the particular risk profile, or maybe the intended operation of this specific ETF according to the document itself? Something to chew on.